Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In news this hour, the Philippines manufacturing PMI for October comes in at 50.1. That's higher than the previous month's 49.9. One among several data points the Bangko Sentral is tracking to closely determine its next move on rates. We get the latest on the PMI result from Jing-Yi Pan, Economics Associate Director at S&P Global Market Intelligence, live from Singapore. The ban on imported rice has been extended until the end of the year. And President Marcos in South Korea urged APEC business leaders to invest in the Philippines, describing the country as open, ready, and eager. His invitation comes on the heels of governance issues at home. Bongbong Marcos has approved an extension of the country's rice import ban until the end of 2025. Agriculture Secretary Francisco Q. Laurel said an executive order formalizing the decision will be issued today, November 3rd. He said the move was made after the initial suspension showed little impact on retail prices and supply, but helped raise farm gate prices of palay. The import halt, first implemented in September, aimed to stabilize palay prices during the wet harvest season. The agriculture chief noted that extending the ban, along with continued aid and a floor price for palay, is expected to support farmers as harvests continue across several regions. The Philippines manufacturing sector largely remained stable in October, with some signs of weak demand tempered by improved business confidence. Data from the S&P Global showed the Philippine Manufacturing Purchasing Managers Index rose slightly to 50.1 in October from 49.9 in September, indicating broadly steady operating conditions. Output and new orders continued to decline amid sluggish demand and weaker exports, while firms cut back on purchasing activity for the first time in nearly 2 years. Cost pressures eased, prompting manufacturers to offer discounts, the first drop in selling prices in 19 months. Still, businesses were more optimistic about future output and continued to hire, with job creation at a 3-month high. Let's get some perspective now with Jing-Yi Pan, Economics Associate Director at S&P Global Market Intelligence, live from Singapore. It's good seeing you again, Jing-Yi. Welcome back to the program.
Well, good morning and thanks for having me.
So what drove October's result, coming all the way from contraction in September?
Well, certainly, Katie, as you mentioned, that we had the number above 50 again. 50.1 is the reading. Now, while this itself actually is back in expansion territory, I think it's characterized a little bit more by just a more stabilization of conditions. Certainly, things picked up from last month, which was the first below 50 reading we've seen in a while, and the latest one, of course, did see output, which is very closely related to industrial production. That had actually shown a more shallow decline, 49.8. So it's really representing a stabilization of condition. And on the positive side as well, as you mentioned, we have the confidence picking up that while manufacturers in the Philippines are perhaps more optimistic that the overall growth situation will actually improve. And of course, on the employment side, we did see that actually picking up as well. So those are the good signs, but I think it's also one where we are seeing importantly as well that demand condition remained quite subdued. In fact, new orders fell at a sharper pace, and that is with new export orders falling for the first time in a while as well. So this is really representing, I think, reflecting the kind of worries we had in terms of trade tensions coming through to actually impact the manufacturing economy in a more pronounced phase, especially now that as we enter the final quarter of the year, the tariffs settled in. So I think that is something that we have to watch. And as you mentioned, that's also affected purchasing activity, how much manufacturers themselves are buying things. So I would say that it's quite a mixed bag at present with the reading itself, despite the fact that the headline number has climbed back above 50. And I think generally in line with the prediction our forecast as well. I think we're going to see a slightly weaker fourth quarter, and that's not unique perhaps to Philippines,
Well, it is,
but
as
for
you
a lot of the
say,
Asian
Jingy,
economy.
a stabilization of the conditions. Let's take that into perspective, because the contraction in September is the third in over 4 years when we talked last month. Now, March was the last time PMI fell below 50. And if we could pull up that chart, we could see that compared to the previous contractions, there is a bit of nuance there of the September contraction. What are you now seeing then in October stabilization?
Certainly, I would say that it's a mixed picture. To a large extent, this was brought up by, well, sub-readings, including, like I mentioned, employment. But I think it's important to point out when we look at the reasons for why employment had risen, that was largely due to the fact that there are some of this easy hiring around the Philippines manufacturing sector, and as well as also some of the delivery times that has actually lent a more pronounced pace. While that typically is associated with stronger demand and therefore help to push up the PMI. But in this case, it's also actually due to some of the supply congestions as part of, well, what we're seeing with the tariffs and whatnot. So from that perspective, I would say that it's stabilization of condition, because importantly, we have the output index falling at a less pronounced, in fact, very marginal pace. So I think that's a positive sign. But what is important, I think, to go into the end of the year is to see, well, at least the demand side of things stabilize, because that's going to be important to keep that number afloat above 50 to show the improvement for the Philippines.
But there were exogenous factors. The last time we talked on October 1st, Cebu had just suffered a magnitude 6.9 trembler. And then 11 days later, Davao Oriental with a 7.4. How did these show up on the October PMI? Because Cebu is a manufacturing hub with electronics a key sector there.
Certainly, well, when we look at some of the reasons, there were some of this present, in fact, telling us why output had actually fallen, whether conditions weren't actually very positive as well. So I think we do take that into account as well, in terms of that. While that typically will actually see to a bit more of this backlog rising, I think, the picture as well is also one that across the region, if you look at some of these manufacturing hubs, for example, in North Asia, there were quite a bit of pressure as well on the trade side. So I would say that certainly played a part, but I think the wider climate externally as well, the demand condition is a little bit more subdued in October.
How about the unwinding of the front-loading frenzy? Because that's also a factor that we talked about last month ahead of Trump's tariffs. Are they done now? And are manufacturers seeing new orders holding up okay post the front-loading?
Well, that's certainly a very good point, because in October as well, I think very importantly for countries in the ASEAN Asian region, there was some of this ratcheting up of the tensions, especially between US and mainland China. So from that perspective, that had actually played a part in terms of, well, dampening some of the confidence and orders in October. We'll hopefully see things actually pick up in November, especially because there was a bit of a relief on the end of October agreement that we saw somewhat hurt so far. So on that perspective, I would say in October, in fact, it's actually a bit of a lot of that front loading had in fact actually pretty much dried up. We can see that as well from the flash US manufacturing survey as well, that the US manufacturers aren't really doing that purchasing. They have a lot of inventories already, and that is actually starting to slow down. So from that perspective, I would say the front loading effect had actually waned off already at the start of the fourth quarter. But hopefully we'll see more stabilization of conditions. What we see in the Philippines is quite a bit of positive sign, because in fact this business confidence picking up, and that's not something we see a lot across the other part of the Philippines region. So hopefully that's going to be representative as well on some of domestic measures that's going to help actually with the manufacturers to shore up output growth in the next couple of months.
Picking up with that relief you mentioned about the ASEAN, Trump provided some tariff perks for selected ASEAN nations. Now, our government said they opted out of those tariff perks. What is your assessment saying, and what manufacturers are giving you feedback of the benefits, or maybe even the lack of opportunities that this poses, or challenges this poses, not being given the tariff perks?
Well, from our surveys itself, it's not collected during the period where they met, so it's actually ended by then. So hopefully we'll capture that views in November, but at least from our economics perspective, I think certainly some of this represent a positive sign in terms of signing of these deals, especially what we have seen already with the likes of Malaysia and also Cambodia, setting a bit of example for the rest to come, including potentially Philippines. But I think as well that I think people do recognize that while this represents a bit of a positive sign in terms of establishing some certainty for manufacturers, but at the same time, there's going to be details such as some of the components origination. These are the kind of things that still remain largely uncertain. So I think that's going to be something that's going. People will look into the likes of Malaysia's deal to see how that is going to be further settled down. And in that perspective, I think that model may at least assume to be something that the likes of Philippines and also the other ASEAN countries may actually adopt in their deal. So hopefully that's going to actually reduce uncertainty altogether in the short term.
We got 2 more months before the end of this year, and as you can see the chart there, September, October, we're seeing a bit of a rising trend, but 1 month doesn't a trend make. You did make a mention of how important the fourth quarter is. What sort of comments are you getting now from manufacturers as the Christmas season rush nears?
Well, in this perspective, I think we did see a bit of a lift in other parts of the region, including likes of mainland China, where we did have some of these new product launches really helping to drive things, at least in the third quarter from what we've seen so far. But at least in the Philippines, I think there is also this recognition that from the perspective of uncertainty, a lot of the demand is lacking, perhaps also from the consumer side. So hopefully what we have seen, at least, very importantly, that reduction in terms of the trade uncertainty following what was seemingly agreed between US and China at the end of October. That's going to help show up some confidence into the end of the year and actually give us a bit more direction. And from that perspective, we're not going to perhaps see so much of a hit to the situation. Obviously, it is still going to be uncertain, if anything, between US and China. That's going to be really just a 1-year deal at this point of time. And any of this, non-compliance could still lead to further ratcheting up of the tensions. I think it's something we have to recognize. But for right now, I think this itself is going to bring back some confidence into the end of the year. So hopefully, November, we're going to see at least more pickup over there. Katie.
But there has been a recognition, Jingy, of the slack in infrastructure spend of late as the corruption investigation in government pushes on. In what way do you think this is tempering manufacturers' outlook for local demand when you look at sentiment?
Well, certainly, I would say that is something that's going to be taken into account for GDP growth, but at least on the manufacturer side, well, fortunately or unfortunately, we don't see so much of that actually getting mentioned in our surveys. I think a lot of the focus have been what we've just talked about. It's a lot on what the tariff is going to mean, because like we mentioned in the past, it's not just a direct effect on Philippines manufacturers, indirect effect on the trading partners, the ones who may be demanding goods manufactured in Philippines from across Asia as well. So that's still the key topic, I'm afraid, that we're seeing.
And of course, jobs. With the pending seasonal effect, how are employment conditions looking, though? Any signs of job growth, albeit seasonal, if any?
Yeah, well, we are in the October month still seeing a marginal rise in terms of employment. And I think that's really a positive sign, despite the fact that demand had fallen at a sharper pace in the October PMI survey. So from that perspective, I think it's actually reflecting that Philippines manufacturers themselves are still expecting future output to rise. To some extent, I have to caveat again that what we have seen in October represented as well better hiring activity. It could be because of following what happened with the weather conditions and whatnot. People are coming out to actually seek employment a little bit more. But from that perspective, we did see an improvement in the workforce capacity. So hopefully that's going to be actually a positive sign for production moving down the road. At least, we have future sentiment, which is a representation of confidence really picking up to one of the near-term highs that we've seen in August. So that is a positive sign there.
All right, we're back above 50 then, 50.1 for October. Thank you so much, Jingyi Fan, for your insights of S&P Global in Singapore. And in other news, Marcos is back in the Philippines after spending 3 days in South Korea for the 32nd Asia-Pacific Economic Cooperation, or APEC, summit. The president described his APEC participation as fruitful, which enabled him to advance Philippine interests such as MSMEs, infrastructure development, stronger supply chains, and digital literacy.
From supply chain disruptions and climate change to persistent economic inequality and the accelerating pace of technological transformation, I'm pleased to report that our engagements were robust, our discussions fruitful, and our shared commitment to collective action reaffirmed.
President Marcos has brought home an investment pledge from Samsung Electronics Mechanics Philippines Corp, or SEMPHIL, to expand its manufacturing operations in Calamba City, Laguna. The 50.7 billion peso expansion will generate 3,000 new jobs for engineers and technicians. Meanwhile, amid tensions in the West Philippine Sea, President Marcos shakes hands with Chinese President Xi Jinping.
Ang hirap lapitan, ayoko namang mamilit, baka suntukin pa ako ng security guard niya. Pinilit ko makapunta sa kanya, and I said, yeah, congratulations on your assumption of the chair for the following APEC, and I hope to do good work together with you. That's it. Mabilisan lang eh. This is APEC. It's an economic meeting. You don't really talk about such issues. In ASEAN, pwede pa. These political issues.
The president has also met with executives from Korean shipbuilder Hanwha Ocean to assist the Navy's submarine program, which will boost the country's maritime security. The partnership involves building a submarine base and capacitating Filipino naval operators to maintain it. The Philippines and Canada have formally signed a Status of Visiting Forces agreement aimed at further strengthening their defense and security ties amid growing regional tensions. Signed on Tuesday, November 2nd, the deal allows troops from both countries to enter, train, and operate on each other's soil. It is the Philippines' fifth such defense agreement after the U.S., Australia, Japan, and New Zealand, and Canada's first in the Indo-Pacific. Defense Secretary Gibo Teodoro and Canadian Defense Minister David McGuinty signed the pact in Manila following bilateral talks in security and defense cooperation. The new VFA, the third under Marcos' administration, still needs ratification by the President and approval by the Senate. Defense officials from both countries said the pact reinforces a shared commitment to upholding a rules-based international order.
Canada and the Philippines are natural allies. And to remember that Canada has been and remains resolute in support of Filipino sovereignty and territorial integrity.
You're watching Money Talks. The Securities and Exchange Commission is looking into easing the burdens on small businesses. And in news overseas, the U.S. government shutdown is set to be the longest in history as Republicans and Democrats remain at a stalemate. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The Securities and Exchange Commission is seeking to ease burdens on small businesses by exempting micro, small, and medium enterprises from submitting audited financial statements. In a policy paper submitted to the Finance Department, the SEC recommended that corporations with assets or liabilities not exceeding 3 million pesos be required to file financial statements certified under oath by their treasurer or CFO instead. SEC Chair Francis Lim said the move aims to improve ease of doing business and cut costs for micro entities in support of the government's goal of driving inclusive economic development. If approved, the policy will apply to financial statements covering fiscal years ending on or after December 31, 2025. Headline inflation likely inched up in October, driven by higher food, fuel, and electricity costs, as well as a weaker peso. The Business World poll of 17 analysts yielded a median estimate of 1.8% for Consumer Price Index in October. If realized, that would be slightly faster than the 1.7% recorded in September, but still below last year's 2.3%. The figure also falls within the Bangko Sentral ng Pilipinas' forecast range of 1.4 to 2.2% for the month. It may also mark the 8th consecutive month that inflation stayed below the BSP's 2 to 4% target. Economists said typhoon hit crops and higher power rates pushed prices up, while stable rise and easing oil prices helped temper inflation. The Philippine Statistics Authority will release the official October inflation data on Wednesday, November 5th. Upbeat earnings from tech giants extend the market's hot streak in the U.S., with NVIDIA becoming the world's first $5 trillion company and Apple and Microsoft topping $4 trillion. The Nasdaq marked its 7th straight month of gains, its longest stretch since 2018. On Friday, the tech-heavy index was up 0.6%. The Dow also in its longest streak of monthly gains, advancing last Friday by less than 0.1%. While the S&P 500 jumped by 0.25%. The benchmark 10-year Treasury yields posted an uptick to settle at 4.1%, and gold prices declined to $3,982 per troy ounce. U.S. futures point to gains when the markets open later tonight, Manila time. As you can see, the green arrows, S&P 500 and the Nasdaq up 0.4% and 1/3% each, and the Dow rises by nearly 1/4%. Asian markets are a mixed bag this Monday, as you can see on your screens, with Japan's Nikkei 225 up 2%. South Korea's Kospi is up 1.8%, while Australia's ASX 200 is down 0.25%. And a quick check on the Philippine markets. PSCI opens this Monday lower by nearly 3%. That's quite a huge drop in the first few minutes of trading there. First 23 minutes of trading at 58.01, holding above 5800 as we speak. Philippine stocks are expected to trade sideways this week due to the volatility in the peso and the Fed's more hawkish stance, according to First Metro Investment Corp. As for the Philippine peso, it opens today a tad stronger, 58.80 to the dollar. Traders have forecast the local currency to move sideways ahead of the inflation release this Wednesday. And PLDT's data center unit Vitro Inc. is expanding its footprint in the Visayas and Mindanao through a partnership with Alliance End-to-End Solutions. The company said the move aims to strengthen its enterprise connectivity and digital infrastructure in the regions. Under the agreement signed via PLDT Enterprise, Alliance joins the Vitro Partner Network to promote digital adoption and provide cloud-ready data and connectivity solutions to businesses. Vitro's data centers, including its Cebu 2 site, will now host Alliance's software products and client systems to improve efficiency and resilience. The partnership is said to support PLDT's strategy to expand beyond Metro Manila and boost the country's digital competitiveness. PLDT and Signal, the owner of this channel, are both part of the MVP Group. And the headlines from around the globe. In the UK, 8 key members of the OPEC Plus alliance have greenlit another output hike in December, but hit a pause in the first quarter of 2026 out of supply glut fears. In its monthly meeting on Sunday, OPEC Plus agreed to increase December output targets by 137,000 barrels per day. but the group decided to pause production increments from January to March 2026 amid predictions of an oversupply. New Western sanctions on Russia's top oil producers also weighed in on the decision. Oil prices fell in October $20 to $60 a barrel on the back of glut concerns, but has since risen to $65 a barrel after the Russian sanctions were enforced. In the U.S., a government shutdown is said to be the longest in history as Republicans and Democrats remain at a stalemate. U.S. President Trump has thrown a wrench into delicate negotiations at the Capitol Hill after demanding to end the filibuster, a Senate rule that requires 60 votes to overcome any objections. The longest shutdown so far was in 2019 when the border wall impasse closed the government for 35 days. Now that record will be broken if lawmakers won't make a deal on Wednesday. And in France, a Paris prosecutor believes the audacious robbery at the Louvre was executed by petty criminals who are not capable of organizing complex crimes. 4 people are now under custody, with one still on the loose, alleged to be the heist organizer. The prosecutor says the suspects are local people living at a low-income area north of Paris. Authorities have not yet recovered any of the jewels stolen, all worth $102 million. And that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. Kapatid, we are one news, all sides, all the time. Have a great Monday ahead.